these mints and mines being shut down for the first 4 months of the year. Now you throw into the mix election, a second wave of COVID, and a overreaction by an already shell-shocked government. I think it's setting up for massive shortages of supply.
Hello there, my friends. Chris Marcus here with you for Arcadia Economics and this week's physical silver and gold market update with Andy Schectman, the owner of Miles Franklin, which is my personal gold and silver dealer. And Andy, it's great to have you on here again today. How are you doing?
I'm doing all right, Chris. How about yourself, buddy? Good to be here.
Doing well. I made it to yoga this morning, so a little stretched out and just listening to some Craig Hemke. We're recording Saturday morning for a call that's going to be posted live Saturday night. And Mr. Schectman, the question I have for you today, hopefully we've seen the end of Corona, but at least to the degree that the headlines being presented, Corona rates spiking, we saw what happened with the response in the silver market on the physical level the first time you had Corona. Again, no one knows for sure, but any thoughts you have on what would happen if there is a significant second wave there?
Yeah, I'm preparing for that, Chris. I think that it would be naive to not, and that comes with a certain modicum of risk. One of the questions that you just asked me offline kind of underscores that, and that was, do you pay over spot for certain coins and when I'm buying them for inventory? And the answer is 100% absolutely yes. And I have instructed I'm going to expand on that in a second here, but I have instructed our operations department to go into our line of credit to buy as much product as we humanly possibly can, anything that's not nailed down, because of our experience in February and March, because of the supply chain disruptions. But I'd like to expand upon that a little bit because I think it's really important. First of all, we have to remember that for the first 4 months of the year, 60% roughly of every major gold and silver mine on the planet were mothballed. We also have to remember that most of the major refineries in the world are located in Switzerland on the border between it and Italy. So they were also closed for the first 4+ months of the year. We also have to remember that coins that we buy that say 2020 on them, that have been sent out to the public so far this year, over the past 3-4 months, just about every single one of those was stamped in 2019. In other words, the mints start producing the following year's product at the end of the previous year. So most of what we see that's circulating 2020 right now was produced in November and December of last year. My argument is, regardless of what happens with a second wave, which I do believe is upon us and or going to fully accentuate itself, these mass protests certainly didn't help the situation. Regardless of how you feel about the reaction, the economic reaction of quarantining the healthy instead of the sick only, aside, I think that what we are seeing right now is a sweet spot in supply that is setting up for, in conjunction with the confluence of events all coming together here at the end of July with the end of the PPP, the CARES, and all of the subsidies that were given to us by the Federal Reserve benevolently. All of these things are coming together at a period of time where there is a major hole in supply in the respect that shutdown for the first 4 months of production, and most of the major mints were shut down, the US and the Canadian mint in particular. These mints and mines being shut down for the first 4 months of the year tell me that by fall, there's going to be a huge, huge hole in supply. Now you throw into the mix election, a second wave of COVID, and a overreaction by an already shell-shocked government. I think it's setting up for, Chris, perhaps massive shortages of supply, wicked high premiums, and I would equate what we see right now to being flat out straight in the eye of the hurricane. The front edge already knocked everybody over, freaked everybody out, blew things up, and then with time comes a smoothing out of fear. People in this country's memory seems to be somewhat short-sighted and very short in nature. Hope springs eternal with the sunshine and the summer and the reopening of the economies. And I think that has taken the focus off of what we saw in February and March, which was pure on panic. And so I am not convinced that the trailing edge of the hurricane isn't right behind us. And when you put the confluence of events, that being the end of the subsidies, kids going back to school, a potential second wave, which appears to be happening. I'll mention something about that in a second here, along with the election. If I'm a betting man, I'm taking the side that things get wickedly nuts heading into the fall. And I think it was a snapshot.
Sorry to interrupt there, sir, but I don't think you remember to mention the Fed's also running a hyperinflation campaign into the recipe. Absolutely.
And it just adds fuel to an already potential 5-alarm fire. But I just think that this is coming. And so we have taken what I think are extraordinary steps to load up on supply. And as I was mentioning, that comes with a little bit of risk because I have to pay higher premiums for everything I'm buying, and I can't hedge those. So when our business buys product, we are able to hedge our exposure to gold and silver, but we cannot hedge our exposure to premiums. Now, premiums have come down considerably from where they were in February and March, Chris, you know that, but they're still much higher than they were last year and for the last decade. And so I am confronted with going out on my line of credit, spending millions of dollars to load up on products so that we are stocked up towards the end of the year, ahead of what I believe will be a major supply shortage because of the shutdown of the mines and the mints the first half of the year. But in order to do that, we have to pay higher premiums than we are really ever used to paying. So we're taking that risk as well. And so the bottom line is that, yes, I think it's coming. I think that we are one event away from witnessing major supply shortages, much higher premiums. And the fact that all of the supply chain was broken at the beginning of the year is setting us up for that regardless, I think, of how COVID plays out. The election in and of itself, I think, will rattle the bushes. But I would like to mention one thing that I find very concerning and is worth mentioning, regardless of how we feel about how the government has handled the pandemic. And I would argue the worst thing that has happened was closing down the economy and quarantining the healthy. It was the opposite of what should be done. But one of my very best friends here in Minneapolis works for United Healthcare. They are the largest medical company in the United States, I believe. And ironically enough, he is the CEO for the state of Texas, even though he lives here, for United Healthcare's Medicare and Medicaid program. And what he told me was frightening. He said, look, you have nearly every ICU bed in the state of Texas filled at this point, and the average age of the people being hospitalized is 40 years old. So we're seeing younger people now getting sick and going into the hospital, and a much higher number of cases than we've seen since this all started in states like Texas and in Florida. And so I am concerned that we're not out of the woods in terms of COVID, and the somewhat irrational reaction by shell-shocked governments, I think, will lock us into the hole deeper this time. You can see what's happening in Florida. They've already yesterday, I believe, outlawed bars or alcohol in bars. How does a bar stay open if they can't serve alcohol at 30% occupancy? They don't. And I think from an economic standpoint, from a reactionary standpoint, and from what happens if this gets worse, much worse, which it very well could, then I think we are in for major disruption in this industry, Chris, and that's why I've loaded up. And I think this is the best advice you can give people. And I'd like to caveat that, yes, I make my living selling gold and silver, but I'm being straight with you, Chris. I truly, honestly believe that this is a pivotal moment in time. And if I had $1 for every time someone said to me in March, damn it, I knew I should have done this. I should have done it a month ago. I was thinking about it. I didn't do it. Now premiums are high and there's a delivery delay. Okay, I'll do it. Now is the time when we're square in the eye of the hurricane, where premiums have come down, where we've been able to secure a good amount of product, that people should take the difficult step of preparation. And it's never fun to confront things like preparation or life insurance or anything that's an unpleasant subject but needs to be done, Chris. And this is the time to do it. This is providing insurance for your family and for yourself. This is a life raft of sorts that isn't costing too much to blow up and isn't costing too much or waiting too long to source. Because once it becomes obvious that it's the right thing to do, you're already 10 minutes too late. So yes, I do think it's going to be a big, big factor heading into next year, or into the end of this year, rather.
Yeah, and one point on there that I could back you up on, Skipper. I mean, I know you're running the shop, so every once in a while someone says, well, the guy just wants you to buy silver. Well, just to support that, I have multiple witnesses who can attest to this. I left Wall Street because of silver, and I've gone through some financial adventures in life long before I was ever making a dime for in any way being attached with silver. And to me, it's just, I don't know, I'm not claiming to be any sort of investment genius, but when you look at today's investments, outside of, well, the Fed's going to make the stock market bigger, which actually could be a not entirely bad investment strategy. But I mean, I don't know what else people could think. So again, by all means, people, don't buy silver unless you feel it's the right thing to do. Although I do think, Andy, you're being genuine there. And another question in terms of things being shut down, I've been hearing a whole range of different comments about what's going on over there at the Perth Mint. I try to confirm as much as possible, but I know you deal directly with them. What have you heard? Is business as normal? I know they have some scandal with artisanal miners, and then anything you could share about the Perth Mint and what's the status there?
You know, that's all I've heard. Also, is the deal with sourcing gold that perhaps they shouldn't have sourced. I guess I have a sweet spot for a soft spot rather for the Perth Mint, because thanks to Chris Martinson and Peak Prosperity, he got me ahead of the game this winter. In early December, when he started talking about the pandemic, I know him well enough as an economist, and a hell of an economist at that. Didn't even realize he was a pathologist and an epidemiologist and a doctor of pathology. And when he got me alerted to what was coming, I was able to secure a tremendous amount of product from the Perth Mint. Look, I think that's one of the arguments for using blockchain as it relates to precious metals, so that you can track and trace the source and the origin of the metal from the time it's pulled out of the ground until it reaches the end user. And perhaps ultimately that will play a role in bringing metal from the mines to the mints and tracking its whereabouts from start to finish using the blockchain. But no, I haven't heard anything other than what you have, Chris. And look, they're one of the 5 major mints of the world. I've never had anything but a good relationship with them, and they really, in my opinion, saved us this first quarter with tremendous amount of product, both gold and silver. So at this point, no, I haven't heard anything more than you have, and I hope that it's not true, because you pull another leg out of the 5 major mint grouping, or 6, let's say: U.S. 1, Canada 2, Australia 3, Austria 4, South Africa 5, and a small 6 being Great Britain. When those mints are out of product, it's game over. And it's happened repetitively in this industry for the past decade plus. You pull the Perth mint out of that equation, I would have had nothing to sell this winter, hardly at all. So I hope it's not true, but sometimes I guess where there's smoke, there's fire. So let's cross our fingers and hope that they're able to right the ship and keep doing what they've been doing pretty darn well for us over the past year.
And in terms of product supply, they are still operating normally, or what's the status?
Yes. Yes, they are still operating normally. We're still receiving silver kangaroos and gold kangaroos. And but, look, disruptions happen. A lot of things that I never thought would happen have happened already. So nothing surprises me any longer. And, like we've talked about before, if I would have made a bet with you last year, what comes first, silver at $50 or oil at -40, I know what bet you would have taken. And so many things that have happened, like the 3rd precinct 15 miles from my house being burnt to the ground, have happened that I never thought were even humanly possible. So I guess I don't know at this point, Chris. Let's hope it's not true.
Yeah, well, hopefully that's the case. Another thing I'm just darn curious myself to watch along is that it seems the Fed is going to make sure that gold does get through its all-time $19-20 high, and I don't see the Fed slowing down after that. So I'm curious how silver will react as gold is making new record highs. It's incredible that gold's as high as it is and silver still at $18, but it'll be fun to follow along. Andy, before we wrap up, I know you had a special last week, and are you running that again this week, or anything for folks who may be looking to buy or sell or store any physical precious metals?
We will continue to run that Arcadia special for you, Chris, on the $2.99 Britannias for as long as we can into next week. And it went so well, we were able to secure another pallet worth of Britannias, and we'll continue to offer that for your listeners. And again, all they need to do is type Arcadia in the subject line or Britannia in the subject line and mail that email to Arcadia Miles Franklin, and we'll be certain and reply back promptly and continue to offer that special for you. And again, just to touch base on what you just said, I think when gold does bust through its previous high and approaches 2,000 and beyond, when gold becomes too expensive for many people, in theory, you will see a rush to silver. And I am betting that silver will be the game the second half of this year. So patience is sometimes you have to have strong fingertips in life and be able to hang on and trust your conviction. And for all of us precious metals holders, we all understand that. Just remember that gold and silver, first and foremost, are wealth, less an investment. And yes, you can get wealthy in silver. It offers that type of potential. It's a very unique time in history where it might be the most undervalued commodity on the planet with the most upside potential, period. But it's not going to be a straight up and down or a straight up ride. It's gonna take some patience and some fortitude, mental fortitude, to be able to hang on through the ups and the downs and the volatility. And most of the bull markets that we've seen in history have their moments of 10, 15, 20% corrections within the body of a bull market. And I think we'll see that with silver. First, it needs to be set free. If silver can break through 18, there's nothing between it and 19. And it's tried now twice to get up and break through 18. It's been held down. I look at 1750 as tremendous support. We hopefully will stay above 1750, continue to make an assault on 18. Once it breaks through 18, then 19 is in its target. And I think that when gold breaks through its previous all-time high, silver will surprise a lot of people. And I look at it as a buying opportunity of a generation, Chris, and I don't say that lightly. There are very few things on the planet that you can buy that are wealth, that are conservative, that are private, that are liquid, world over, that offer that kind of potential. In fact, I look at the everything bubble around us. And the only thing that isn't in the everything bubble, stocks, bonds, real estate, etc., are precious metals. And they are still woefully undervalued, and nowhere more so than with the price of silver. So, yeah, we're happy to continue to offer the Britannias at $2.99 over to help your listeners take advantage of what I think is not only the buying opportunity of a generation, but the most undervalued commodity in history. And we'll continue to do that as long as we can for your listeners.
Well, I do appreciate that. Certainly because in addition to the Fed's open-ended QE policy, we also have the election coming up this year, which should be a real hoot. And then on top of it, for anyone who's unaware, the theme of Davos 2021 is actually the Great Reset. And if you want to know any idea of what could be implied and what could be planned for that one, well, stay tuned because last night's episode covered exactly that, and it's coming your way now.